Everyone, welcome back to the J22 report. I'm your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. And just gonna do a video for this today. The jobs numbers is down and whatnot. And just let's go over a couple of things. I guess let's see. First of all, looking at today's thing, gold was up $1.40. You can tell that silver was down 35 cents. And if you look at it, interesting things I found on the market, the stock market, on the other hand, if you actually look at it here, S&P was up 15, Dow was down 123, Nasdaq was up 159. But let's go over the data and what I think interpretation is if you look at it, the jobs numbers. Where is it? Non-farm payrolls, 227,000, way above consensus. The unemployment rate, though, is look at forecast 4.1. They had consensus 4.2, but 4.2 it's ticking up, but wages good. Participation rate went down. What's this mean for the real economy? I don't even believe the numbers are real. So if you actually look at it, the U6, 7.8%. I believe that's more closer. But if you want more, generally, car prices have been going down lately, like used car. This I found interesting. 1.3% month over month, and a year over year, it's now 0.2. Previous was 3.2, but as I said, you look at Michigan consumer sentiment, we're in Trumphoria. So sentiment's high, inflation's 2.9, but yeah, so this is for the next couple of months. I think they'll be good. And regarding rate cuts is I think they want to reverse course and put rates back down to zero or next to nothing. But sorry, I had something on my foot. You look at it, 87% chance the Fed cuts rates in December now. So I think they'll cut in December. And then I was looking at this. When you look over the last several reports to be fairly comfortable, they're still getting the soft landing. And there are enough risks that I think they still need the lower rate. So if you look at it, this isn't the most bullish gold environment for gold. And that's why I think it's also correct, is because in order for gold to really rip roar, you need a bad economy. If you actually look at it, I remember all bar charts did a chart of the unemployment rate and the gold price, and basically almost tracked it completely. But there's two other things I wanted to look at right now. I was looking at first is, we talk about the bubbles and the problems that await in the future, and problem I think Trump will have to deal with. Uh, U.S. consumer credit surges past expectations in October, and revolving credit, which includes credit card debt, increased rapidly, 1.3 trillion. And then auto loans and student loans, these are two non-revolving advance rapidly to 3.739 trillion from 3.736. And one of the biggest myths going today is that we have a debt problem, we can grow our way out of it. We can't grow our way out of it. And everyone thinks it, regardless of presidential candidates. It's not going to happen. So we are in a bubble. I think 2026 conservatively is when it will start showing up in the markets, meaning the problems. And I was actually looking at this. This is my last thing for gold. Gold should rise, but upside cap for potential higher inflation. So if you look at it, the market, looking at this, upside potential is limited by expectations that inflationary pressures could rise under a Trump presidency, which could cause the Federal Reserve to maintain higher rates for longer. So what they're saying is they think the Fed, if inflation gets up, is going to keep rates higher and higher for longer. The truth is they can't keep rates higher for longer. And the reason why they can't keep rates higher for longer is the interest on the US national debt will get so astronomically high, it will consume most of the budget. They have to keep rates lower for longer. And when will the markets recognize this? That will be a interesting question thing. But these are just important things that I wanted to point out because this is obviously the expectation that the Fed could raise rates is, I think, capping gold. That's number one. It's not capping the stock market, but it will. And that's one of the reasons I think it is. You see gold underperforming. They say it underperforms the stock market, but I don't know. Is it really under we've gone in, it's outperformed the stock market this year. Not by much, but it's outperformed it. I don't know what I mean, it's hard to tell because some people say the S&P, some people say Dow Gold. But so far, we'll look December 31st. I mean, I'll be out, so I'm not going to be doing videos from end of December till beginning January. But gold, I don't know. I think gold needs to stay up there. I think it needs bad economic data more so than anything because from 2008 through 2011, gold rose with the stock market, and the reason it had bad economic data. So I don't think we're gonna have that yet because I don't think they want to hand off a bad economy to Donald Trump. They want a recession to happen under his watch so they can criticize him. And so they will keep, if you look at it, the jobs numbers last month were actually revised upward for a change. And that's because it was a bad jobs number. They had to do that. So anyway, that's all. Hope you have a nice weekend. Hit that like button if you watched all the way through, subscribe, and thank you for watching all the way through because if you watched all the way through, you really helped the algorithm. So I will see you next video.